Your CPA files your taxes, but who's designing your strategy? For many successful entrepreneurs, tax season follows a familiar pattern. Your CPA gathers documents, the return gets prepared, you sign the paperwork. At the end of the process, one of two things usually happens. Either you owe a large check to the IRS or receive a modest refund. Then everyone moves on till next year. From a compliance standpoint, the job was done correctly, but there is an important question most business owners never stop to ask. Who is actually designing the tax strategy behind those numbers? Before we go any further, I'm Mark Schreiber, CPA, Senior Partner at E3 Wealth. More than 30 years of accounting and tax experience, I help families and business owners make more confident decisions around investments, taxes, and retirement planning. And one of the most common frustrations we hear from business owners is this: I feel like I'm paying a lot in taxes, but no one is helping me plan ahead. In many cases, that's because the traditional tax preparation process is designed to be reactive, not strategic. Now let's get started. Most tax professionals are primarily focused on compliance. Their responsibility is to file the tax return correctly, ensure the reporting is accurate, minimize the risk of penalties or audit exposure. And that's an important role. But compliance looks backward. It reports what already happened. A tax strategy, on the other hand, looks forward. It asks questions like, what will your income look like next year? What will it look like in 5 years? How will business profits, investments, retirement contributions, and liquidity events interact with the tax code over time? Those are fundamentally different conversations. For entrepreneurs, income is often variable and complex. You may have business income, K-1 distributions, investment income, real estate income, and sometimes large liquidity events. Each of those pieces interacts with the tax code in different ways. When those decisions are made independently by different advisors at different times, the result is often uncoordinated planning. And uncoordinated planning almost always leads to missed opportunities. Strategic tax planning typically starts with something simple but powerful. Instead of waiting until April to see what happened last year, you model what the current year might look like while there's still time to adjust. That may involve questions like, should income be accelerated or deferred? Does it make sense to increase retirement contributions? Should Roth conversion be considered in a lower tax income year? Is there an opportunity to restructure how income flows from the business? These decisions often have to be made during the year, not after the year is over. Once December 31st passes, most of those options disappear. The other missing piece is coordination. Many entrepreneurs, the advisory team looks something like this. A CPA prepares the tax return, an investment advisor managing the portfolio, an attorney handling legal matters. Each professional may be doing an excellent work within their own lane, but if those decisions are not coordinated, the overall strategy can still fall apart. When tax planning, investment strategy, and financial planning are aligned, the outcome can look very different. When people hear the phrase tax planning, they often assume it means finding clever deductions, but the real value often comes from structural decisions. For example, how income is layered over time, how retirement accounts are positioned, how liquidity events are planned. Those decisions can influence the amount of tax paid not just this year, but over the next 10, 20, and even 30 years. And when viewed over that kind of timeline, the difference between reactive compliance and proactive planning can represent hundreds of thousands of dollars. Your CPA plays an important role. Filing a return correctly matters, but for high-income entrepreneurs, clean filings are only part of the equation. The more important question is whether there is a forward-looking strategy behind those filings, because taxes are one of the largest expenses most entrepreneurs will face over their lifetime. And when that expense is managed strategically, that financial impact can be significant. If you're interested in exploring more about proactive approach to tax planning might look like, we invite you to schedule a conversation with our team. Because the goal isn't just filing your taxes correctly, it's designing a strategy that may help you keep more of what you build.